So in this video, I'll be talking about something of interest, and that is basically how to identify your order block. As you can see on this page, you can see some charts and my order blocks on them. So here I'm trading the ZEC to USDT. Now there are so many ways that people can use in identifying order block. I'm on the 1 minute, I'm on the 1 hour chart right now. So let me reload this so that you guys can have a clearer picture of what I'm doing here. So as you can see, the market is basically trending up. Now when you are analyzing, it's always advisable to start from the higher time frame to analyze your market. People make the mistake of starting from the 5 minutes or 15 minutes and they start going up. No, this is a mistake a lot of people make. You have to, first of all, look at the bigger picture in a bigger perspective. And you can only do this by looking at the higher time frame. As you can see, at the 4 hour, basically this is how I trade. I take my trades. I come to my laptop, I open my charts, I look at, first of all, I look at the 1 hour time frame because 1 hour is like my favorite. Is what does it for me. I look at it, and then after looking at it, I have a mid picture of what the market is like, because 1 hour is sitting in between the lower time frame and the higher time frame. And on my trading, I use 4 hours as my higher time frame and 15 minutes as my lower time frame. So I basically want to start at the middle. That is how I do it at the 1 hour time frame. So let's say that I entered this page, this chart right now, and look at me at the 1 hour. So the market is trending up. Okay, I'm like, okay, the market is trending up. I go to the 4 hours time frame to confirm if the market is actually trading up at the higher time frame, because the higher time frame gives you a more long-term picture of what is happening, not short-term. So the market is actually trending up. Now, once I've confirmed this, I go back to my 15 minutes time frame to execute. To what? Execute. This is now from my own strategy. I prefer to execute trades from the 15 minutes time frame because it makes it more easier to enter and to go out, especially as a day trader. Now, if you're a swing trader, then you should be dealing with the 1 week charts and daily charts, and then the 4 hour chart could be your lower time frame. But me, I'm an intraday trader. My aim every single time I come onto my laptop is to take trades and to go out of that trade and to make my profits or take some losses. But as much as possible, I try, and we should try always, to keep our losses to a bare minimum. So here, as you can see, I have some other blocks marked out. By the way, I trade using the SMC trading strategy. So basically here, how do I identify my order block? Let's say that these things weren't here. I delete them. So how do I identify my order block? First of all, one of the easiest ways I use in identifying an order block is using external ranges. Because external ranges tend to be more respected than internal ranges. Now, what do I mean by internal and external ranges? From here, okay, let me show you guys something using this marker. From here now to here is a range. Then this is the upper range. Then from here to here is the lower range. As you can see, I'll be drawing this so that you guys can be having a clearer picture. Let me draw another one. So here is another one. These are all ranges. Range is like the market moving like this, like this, like this. As you can see, that is how the market is going. These are all ranges. Ranges. And ranges. So as you can see, the major range here is here to here. All these ones don't really matter. The major range here is here, from here to here. Now, as a trader, you should respect more of the major ranges than the smaller ranges. These are all small ranges, which are most likely not to be respected. So your major aim should be to respect and trade along these major ranges. Now, as you can see, this is a major range. Now I can easily come here and mark out my order block here. And also, if you go to a higher time frame, as you can see, is a major range. That means the likelihood of the markets, let's say the market comes down here. Okay, let me extend this so I can have a clearer picture. Let's say the market comes down here. Let's say the market comes down. The likelihood of it bouncing up after hitting here is very high compared to when you just trade from here. These small ranges. So I don't know if you guys are understanding the points I'm making. If you are trading, respect and trade along the major ranges, because most likely these smaller ones will not be respected. Now let me delete this to avoid confusion. Now if you mark here, you see that here is also another major range because it's it's kind of big. Then these ones are smaller ranges. Now as a trader, I will come here and mark out my order block because this is a major range. So the possibility of the market coming here and bouncing up and respecting this zone is very high. As you can see, the market came down here 2 times and still went up. Let me do this. The market came here, the resistance was much, it bounced up again. Came down here again, the resistance was much, it bounced up before it started moving. So that means there must be something holding the market down here. There must be something resisting the market from going down here at this point. So that is why I came here and I marked out my order block, because the possibility of this thing coming down and respecting here and bouncing up again is very high. So that is basically how you take your order block. Now there are so many other ways to do it, and I'll be talking more about this in the coming videos on the trading aspect of my channel. So guys, see you guys in those videos. Subscribe to the channel and let's keep learning. I teach you guys how to make money online using Upwork, trading Forex, trading crypto, and getting tech skills, because these are all how I make money online. So see you guys in this video. Peace.